Claire, I just saw your name typing and I didn't hit go live. Thank you for, and you probably just went back to double check to make sure that I went live. So if you're watching YouTube, welcome. All we're doing is we went to the news and now we're just going over a couple definitions real quick. We're going to focus initially on a high probability trend trade, and everything's going to agree, guys. And this is going to be that one that keeps you focused on the best of the best, that first 30 days, focused on the one trend trade that happens after a termination condition on the 13.2. Every chart agrees, everything's there. And that one trade is going to give you one of the most important skills you will ever have as someone who trades the markets. Good morning, Claire. Thank you. It's going to make you a chart reader, guys. It's going to teach you to understand what's happening on your charts at a glance. You're going to understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And you're going to be able to do this instantaneous. It's really an amazing skill that you're giving yourself right now. Because 90% of what we do is going to be just chart reading. 90% of what we do is gauging the advantages. Are they present? And if they are, that 10% comes in. Hey, good morning, Mohammed. Nice to see you. That 10% becomes the trading, guys. So as you approach your journey with Nexgen, let your first step be to be a chart reader. Good morning, Christina. Nice to have you back. Focus on chart reading because your ability to read charts is going to make you an amazing trader. So we're going to focus on that first step today. We're going to focus on that high probability. Everything says go kind of trade. And guys, it's a very, very simple trade. It's a high probability trend trade. It only entails 3 rules. There are 3 things that you have to be able to recognize. And these 3 rules, we're going to talk about them individually. But it essentially gives us the equation for, or the recipe for a trade. Our chart reading lets us know if we have strong trigger lines. Our chart reading lets us know that no termination conditions are in our way. And a chart reading lets us know where the market is likely to continue. When we put those 3 things together, it gives us 3 very distinct advantages. The advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And that's what creates a trade. And this trade is going to happen on 2 charts, new users. Keep it simple. We're going to use a 13.2 chart initially, and this is a higher time frame. This is a larger chart. It's a slower chart. And you're only going to need 1 bar to make a determination on the trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. Let me show you how simple this is. Guys, there's our uptrend. Background is green, right? We actually just saw a beautiful entry for a high probability trend trade right there. We'll come back and talk about that one. If the background is red, we're in a downtrend. You're going to be able to recognize your first 2 rules being met on the 13.2, that advantage of momentum, that advantage of a clear path. And everything that happens in this 1 bar, guys, happens in 15 to 20 bars on a 5-1, this smaller, faster chart. This is where you're going to refine that large chart. And you're going to be able to identify where the market is likely to continue. You're going to be able to pinpoint that entry, so much so that you'll use a limit order to buy or sell a pullback in an area at large triggers. You're going to wait for the market to come to you. This is going to allow you to reduce your risk, and it's going to allow you to maximize your profit potential, guys. So give me a why in the room, brand new users. I know that we're just still filling the room. We're going to keep it simple on 2 charts. We're going to focus on just 3 rules. And we're going to turn ourselves into chart readers today, right? That's going to be the goal. And guys, while we're talking about chart reading, I hope you guys saw it. I don't know if he sent out an email. While I typically pull everything from, John, get out of my head. There's the link John Novak just put in the room, guys. John Novak put this page together on trigger reading. Over the weekend, and man, I'll tell you what, new users, this is an unbelievable read. It's I teach the class, and I read this, and I was like, oh, There was an aha moment for me, and you're going to have to hear about it today. But follow that link after class, guys, and reinforce these rules, because trigger reading is really what we're doing on that large chart. And we're starting with rule number 1. Our trigger reading is determining that we have strong triggers. When my background is green on my 13.2, I'm in an uptrend. And when I'm in an uptrend, those strong triggers mean that the small triggers have broken above the large triggers. The large triggers are widening. They're angled in the direction of the trend. And guys, it's that space created between small and large that lets me know that the odds are favorable for the market to continue up. That odds favorable momentum, you're going to hear it in the class a lot. You're going to see it on people's charts. That OFM, odds favorable momentum, letting me know that that trend is likely to continue. In a downtrend, when the background is red, the small triggers break below the large triggers. Those large triggers are widening. They're angled in the direction of the trend. Once again, guys, this is that strong trigger look. This is rule number 1 right there in pictures, letting you know that the odds are favorable for the market to continue down. I say a lot, let your 13.2 triggers lead the way. And when you have that odds favorable momentum, that advantage is very solid. As they return to the large trigger lines and then break back inside of the large trigger lines, we call this a weakening of the large triggers. And guys, anything can happen up or down. Remember that trading revolves around advantages. The advantage of momentum always starts the process. We're looking for that high probability trend trade. So commit this look to memory. Understand that in an uptrend, we may not have odds favorable momentum from start to finish. From that point where it breaks away and accelerates, creates the gap until it returns, guys, this is where we're going to look for our opportunities for that high probability trend trade. Absolutely, Joel. Same thing in a downtrend. From that point where it accelerates away, all the way until it returns, till it weakens, till it gets back to that anything can happen. Guys, this is where we're looking for. Very nice, Bobby T. It's been a good morning, hasn't it? This is where we're looking for that absolute best of the best. And these circles represent potential entries on a 5-1 on that smaller, faster chart. And you'll notice how during odds favorable momentum, we get a couple of those. We're going to talk about how to take advantage of that. And that's too good not to share, guys. What a great way to start your Monday morning. I love that. Bobby, you're going to be fishing early today. Hope the weather's nice for it down there. So brand new users, do me a favor, let me know. Let me know that you're good with this. Odds favorable momentum, the advantage of momentum on that larger chart, setting you up for success, right? Rule number 2 says don't trade into termination conditions. Nice. Boat already out. I love it. What's a termination condition, guys? Well, this is where John Novak's new page really kind of gave me an aha moment. Termination condition is a Fibonacci-based indicator that may reverse the market, but it's based on a comparison of those trigger lines in the area. So once again, we're just reading trigger lines as they approach an area, whether it is support, resistance, one-to-ones. It may be a divergence high line. It could be a divergence low line. It could also be a large chart midband if the large triggers are a full bar away. And all of these are happening on that 13.2, guys. We're looking for these on that larger, faster chart, except for one, which is any 3 divergence in the same location. And to determine a termination condition, you know what? I think I already have a picture of this, but we'll talk about it like this. Price reaches an area. Those price bars come to an area, whether it's support, resistance, one-to-ones, doesn't matter. And then once again, we're going to read those trigger lines. Where are they? After price reaches any Fibonacci support, check the trigger lines. If they're not below the support, don't take any more trend trades, guys. No shorts into the area. Price reaches, where are the triggers? If the triggers don't break, we've reached a termination condition. One of those areas that may reverse the market. Is everybody comfortable with that one so far? Give me a Y in the room. New users, let me know. Price reaches the area No triggers break through, no trade. Guys, remember that we're looking for the advantage of a clear path. Price reaches resistance, no trigger lines break through. We're reading our triggers when they get to the area. No trigger lines break through. We don't have a clear path. We're not looking for that trade. Price pulls all the way back to support. That's okay, Bobby. This class is going to help people buy their boats, so they need to know this stuff. Price pulls back to support, guys. Absolutely no trigger lines are through that area of support. It is a termination condition. No short trades into the area. You'll see that price pulls right back up to resistance, guys. Right back up to that divergence high. A second resistance. No trigger lines break through again, guys. Termination condition. So we have 3 termination conditions over the course of like 10 minutes right here on my bigger, faster, slower chart. Excuse me. Take a deep breath and let the coffee settle in. Guys, 90% of what we're doing is going to be reading indicators. 90% of what we're doing is chart reading. 10% of what we're doing is taking a trade when the advantages are present. This termination condition, what we call a pivot stop out at a divergence high, that means that price trades above this divergence high, then back below. Don't take any long trades, guys. And if Fibonacci resistance is there, this is an amazing termination condition that typically creates a larger move. Sorry to hear that, Gary. Get with Jason and Tech. It's this termination condition that creates the full reversal, guys. This is what we call a strong top. This is our best of the best look to look for that high probability trend trade with the odds favorable momentum. From the bottom, we see it again. Price reaches the one-to-ones, no trigger lines break through. Hey, good morning, Cal. No short trades into those one-to-ones. This termination condition creates a full reversal. My large triggers go from red to green. This full reversal gives me odds favorable momentum. It gives me a clear path. And guys, there's that circle once again, looking for the entry for the high probability trend trade. So I'm going to ask one more time, guys. Price reaches an area, absolutely no trigger lines break through. We have a termination condition, no trades into that area. When both your small and your large triggers break through the area, support begins to act as resistance, resistance as support. It's both the small and the large breaking through the area that provides me the advantage of a clear path. Guys, we're talking high probability trend trades right now. We're talking about the absolute best of the best. Your high probability trend trade, your ability to read charts is going to take you to your next trade, the one that's going to be the majority of your trades. And guys, this is what we call a medium probability trade. When most of your indicators line up for a trade, however, a small issue exists. The language is important there. A small issue exists, not multiple small issues. Not a bunch of issues exist, but I'm going to take it anyway. But really, a small issue exists. You're going to be able to identify that with chart reading. You're going to be able to take these trades, manage them assertively, understand where the problems lie, get to a zero loss level. This is going to be the majority of what you do, guys. What we talk about in the first hour is giving you the ability to read your charts. Once we get through this first hour, we're going to start talking about all the things that are going to take you to that next level. I'm not sure what that link is. There's one more termination condition that I'm going to talk about before we get on to entries, guys. Sometimes you'll watch the market, and the market's going to show you, well, it's not going to show you. It's going to look like it turns. Oh, okay. I'm going to reference that a couple times today, John. All of my trigger lines get below support. I don't reach a key area, but the market appears to turn from the middle of nowhere. Even with odds favorable momentum, we don't reach that key area. The market appears to turn, drop back down. This final termination condition is the one that you'll be able to recognize on a smaller, faster chart. And this is going to help you identify change that you don't see on that bigger, slower chart. and it's 3 divergence in the same price range, and it may terminate the trend. This becomes very powerful when the third divergence happens with the small triggers inside of the large triggers. So each divergence, each negative number with a divergent cyan low line or a magenta high line is a loss of momentum in the market. And I want you to just equate that. Divergence is a loss of momentum. When we lose momentum 3 times, it may terminate a trend. When that third loss of momentum happens and my trigger lines go from odds favorable to anything can happen, it becomes more powerful still. And when that third divergence is higher than the previous from a low or lower than the previous from a high, guys, this may be a trend changer. This could either give you a push back up to higher Fibonacci levels, or it may be the start of a complete reversal. You're going to recognize this look from a low and this look from a high times like these when the market appears to be turning from the middle of nowhere. So when we talk termination conditions, we're always starting on the 13.2. We're looking for that clear path on the 13.2, making sure that we haven't reached an area. On the 5.1, we're going to be able to use divergence to help us identify change faster. You're also going to be able to use this to help you manage your trades. If you recognize on a smaller chart 3 losses of momentum, if you recognize that trigger change, smalls work their way inside, it's going to help you manage out of trades that aren't looking to reach that next Fibonacci area. So guys, so far on the equation, where did my picture go? That's the wrong picture, I apologize. So far on our equation, we have odds favorable momentum coming from the 13.2 chart, those strong trigger lines. We have the advantage of a clear path, not trading into termination conditions, once again on that 13.2 chart. And now we're going to define our area for entry. We are going to find that best of the best spot where the market is likely to continue, giving us that final advantage to take a trade. And we're going to use a limit order to buy or sell a pullback at an area, meaning that we're going to let the market come to us, guys. We are going to let the 13.2 give us the advantage of momentum. We're going to let the 13.2 give us the advantage of a clear path. And then on that smaller, faster chart, we're going to wait for a pullback, a small retracement that's counter to the underlying trend, guys. And the reason we use these two charts is your large chart's what the big crowd is thinking, right? The big crowd says that we have momentum. The big crowd says that there's nothing in the way. The small crowd, this little group of yahoos here, is going to fight trend and momentum and give us the absolute perfect entry. And we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. When the rules are met on the 13.2, everything says up. There's nothing in the way. This is when we make the decision. All right, it's time to look for a trade. Let's get to my 5.1 chart. Let's find that area where the market is likely to continue. The 13.2 triggers are strong. You can see that the 5.1 is nothing but up bars in this uptrend. The smalls are well outside of the large triggers, odds favorable momentum. It's the same look on any chart. My large triggers are coming up strong like a shark to breach. I'm going to focus my attention on these large triggers and the areas that are falling within them. High probability trend trades always originate from an area. Those areas can be fibs, they can be mid-bands, or it can be one-to-ones. It can be any combination of the three. It could be one on its own. But I'm looking for fibs, mid-bands, and one-to-ones that are going to fall inside of favorable large triggers. The rules say that we're going to buy a pullback. And a pullback begins with a reversal bar. And this reversal bar lets me know that that small crowd is fighting the big crowd. You're going to create a window of opportunity, guys, from the highest point of support to the lowest point of support inside of favorable large triggers. This becomes the area where the market is likely to continue. Because we're using a limit order to buy that pullback, you're going to right-click right at the top of the window, maybe a tick or two above the highest point of support. And you're going to wait for the market to come to you, guys. And if it does, If it pulls back to that window, that area inside of favorable large triggers, you're now long at 79.21 in this particular trade. Remember that you're long with the advantage of momentum, the advantage of a clear path, and you're long from the area where the market is likely to continue. You've identified your entry. Guys, this is your best of the best. This is a trade that typically wins 70 to 80% of the time. Our initial stop goes below the window of opportunity where the market shouldn't go. And this is a trade with all those advantages that I will take 1,000 out of 1,000 times because this is my expectation 70% of the time, 80% of the time. Once it begins to move in the direction of my trade, I can reduce my risk below a reversal bar because I waited for the pullback. My risk is reduced because I waited for the pullback. My profit potential grows. Guys, this is your highest probability trend trade. This is your best of the best. Do me a favor, give me a Y in the room. Brand new users, demos. You guys working on hitting your entries? Are you with me so far? I've got some window of opportunity pictures I want to share with you. When this reversal bar happens, your window of opportunity isn't the trigger lines, not the red box. It's the areas within. In this case, the window of opportunity is one line wide. What a wonderful window, right? This red Fibonacci resistance is not inside of the triggers. It's not inside of my window. Same thing here, reversal bar prints from the top of the triggers to the bottom of the triggers. I'm looking for the areas that fall within. From the highest point of support of midband to the lowest point of support, these one-to-ones. Guys, this is where the market is likely to continue. This Fibonacci support, again, outside of the window. It's outside of the large triggers. It doesn't fit inside of my window of opportunity. One more, guys. Reversal bar prints from the top of the triggers to the bottom of the triggers. I have both midband and one-to-ones. Look at how tight and concise that window of opportunity is, guys, that place where the market is likely to continue. You can decrease the size of your window dramatically by making sure that your large triggers, your synthetic triggers, are overlapped, one on top of the other, both in the direction of the trend, both strong. This is going to tighten up that window of opportunity for you. So there's a very definite path to becoming a confident trader, guys. The first is posting your trades in class. Everything you do, post your trade in class. Let's talk about it. Win, lose, or draw. Show me what you're doing. I'll give you feedback. Together we'll work to get to where you want to be. The second thing is tracking everything that you do in a spreadsheet. The spreadsheet's already been provided to you by Nexgen. This should be in your Nexgen Study Picks folder. Here's the link just in case you don't have it. Remember that we're learning to be chart readers. Our first 30 days revolve around the best of the best. Every trade you take, win, lose, or draw, guys, there's information in everything. You're going to put on this first page, and you're going to be able to recognize through repetition patterns in the market that are bringing you success, but you're also going to recognize patterns in yourself that may be hindering your success. When you start filling up the spreadsheet, you may recognize that you're trading into an awful lot of termination conditions and you're losing those trades. So we begin to recognize together that pattern to help work you out of it. Maybe on 50-50 trades, you fight multiple divergences. So you're going to find your strengths and your weaknesses through filling out that first page. The second page are your personal favorite looks. Guys, every time a trade comes together and you take a picture of it, you're going to put it in this green section. Every time your rules are met, you're going to develop, once again, that success through repetition, identifying your best of the best look, and committing to it, committing it to the spreadsheet so that you can commit it to memory. And then the last page, guys, I've given you 70 pictures of high probability trend trades. 70 pictures for you to compare what you're doing to what we're doing, to what the rules say. So the spreadsheet becomes a very integral part of your path to success. Make sure that you're taking pictures. Make sure that you're showing them to me. make sure that you're filling out that spreadsheet. And then it's just a matter of study. This is the S&P right now, guys. Odds favorable or anything can happen? What do you think? Is this a market where the odds are favorable for it to continue down, or is it anything can happen? And guys, they're killing it. It's anything can happen, right? So the advantage isn't there. Guys, there's 3 divergences in the same location on a large chart. But what I want you to see is when you lose momentum, your small chart tells you you're losing momentum as well. 1 divergence, 2 divergence, small triggers inside. Look at how the market's pushing up, guys. My chart reading told me, don't go short. You don't have the advantage of momentum. My small chart confirmed it, and it keeps me from trying to go short at a mid-band in the middle of nowhere. Rules are designed not only to give you advantages, but also to recognize when the advantages aren't there. The flip side of that is when I do have odds favorable momentum, when there are no termination conditions present, if I go back on my 13.2 and I circle that tail that I see, guys, this is your study. Whoops. And I'd very much like you to give me a Y in the room if you see it. Small's above the large are wide, they're angled in the direction of the trend. Price has not reached any of these areas. See how the top of the bar is below, right? Where did that pullback come to? Directly to an area inside of favorable large triggers. And you're absolutely right, Ron. Rules are going to keep you out of choppy markets. Rules are going to keep you from trading into areas that might reverse the market. Rules are going to give you the advantage of momentum, guys. So what we're doing right now is we're embracing the rules and recognizing the best of the best. So I put these in here earlier. I'm going to give them to you again real quick. The easiest way for you to make sure you're doing what's right is to take a picture. And I just gave you guys a couple spreadsheets. Is the market coming from a good top or bottom? Was there a termination condition at the bottom that created full reversal that gave us odds favorable? In this case, it was a yes on the S&P. Guys, help me out with this. Did I have odds favorable momentum on the 13.2? Were my small above the large? Were they wide? Were they angled in the direction of the trend? Absolutely. Did I have no termination conditions present? Price had not reached this key area yet. All of my trigger lines are good. No termination condition. And then do you see how I had an area for entry inside of favorable large triggers? Guys, I can check yes on this checklist. Because I can check yes, this is my high probability trend trade. This lets me know that I have those advantages, that the equation for a trade has been met, and I can develop trust. So I can take this picture, I can verify, and now I'm going to bring it to screencast. I'm going to upload it to my screencast, whether it's Capture or whether you're using Snagit. I've put my rules on there. And guys, there it is for you right there. I'm going to post it in class, and I'm going to wait for feedback. You and I are going to have a conversation about what you see, what you did, why you did it, where you got in, where a potential exit was. And then I'm going to come to my spreadsheet, and I'm going to go to my Nexgen favorite looks. Look at this one. We're up to 112 with this picture. And I'm going to put it in as a hyperlink. And I'm just going to call it Perfect High Probability Trend Trade. And now I can come back and I can study this each and every day and make sure that I can do it over and over again. So guys, your job as a brand new user is to do exactly what we did here, to scroll back on your 13.2 and look for an instance where you have both odds favorable momentum, here we go, in one of those tails, because the tail is the potential entry on the 5-1. Why do we study? And I want you to see, The time between this high probability trend trade and this high probability trend trade was about 20 minutes, give or take. 90% of what we're doing is letting the market do what it's going to do, focusing on those advantages. But if I scroll back and I have this one, let's go to 8:51, guys. Whoops. What do you think? Area for entry inside of favorable large triggers. It happens once again. The live market every day. Guys, if you took just these two trades today, you're probably done. The market's been open for 6 minutes and you've already exceeded your goal based on a high probability trend trade. Give me a Y in the room if you guys are with me on this one. Can you go back and study? Can you take these great looks and circle a tail? Guys, we're building trust, right? We're building repetition. Holy smokes, it happened again, didn't it? Look at that pullback right to the area of resistance inside of favorable large triggers. Is everybody comfortable being able to find this entry? The more you study this look, guys, 30 days, 20 days, being able to get in right at the area inside of favorable large triggers, great entries create easy management. So your focus, that's a word, is to define that perfect entry. Focus on that entry. Get that entry dialed in so solid that management becomes easy. Use the phrase, my trade is. My trade is the high probability trend trade. Why? Because this is a trade that when I execute the rules typically wins 70 to 80% of the time. In order to enter, guys, my checklist must be met. I print this checklist out, I put it on my desk, and I check myself every time before I go into a trade. I take a pre-trade picture. If I'm wondering if I have the best of the best, guys, I'll take a picture. And I'll start asking myself, are my rules met? I'll use that checklist. I'm going to take pictures of my perfect entries, long trades, short trades, only my entries, just like we just did in class by circling those tails. I'm going to study by scrolling back. I'm going to steal pictures from class. When Christina shows me the perfect high probability trend trade, I'm going to steal it and I'm going to put it into my spreadsheet. I'm going to take them from the manual to make sure I understand the look. But guys, in the first 30 days, the more pictures you take, the faster you're going to get to where you want to be. The more pictures you take and present, the quicker your chart reading is going to excel. What's my perfect trade? Well, let's click right here from my plan. It's odds favorable momentum. It's no termination conditions. And it's a pullback to the area of support inside of favorable large triggers. I have it visually right there. Remember, guys, if you give me 20 days, does that feel like a long time to anybody? Give me 20 days, 20 trading days of focusing on the best of the best. Nail those entries. Everything else is going to get easy for you. And then from those entries, you're going to develop a management plan. A lot of users find it helpful to keep it very mechanical in the first 20 days, very methodical. Trade 2 contracts, initial stop will be 12 ticks. I'll move it above or below the window of opportunity. I'll take profits at 100 and 200. Guys, if you allow the first 20 days to be your management or your entries, keep your management very mechanical, your experience, your ability to read your charts is going to grow your management plan exponentially. But it takes the ability to read to manage. So focus on your entries. Guys, we've seen 3 absolutely perfect high probability trend trades so far in the S&P. There's another one. Let's see what this one looked like. That one was a little closer. Pulls right back to the resistance, right at the bottom of those triggers. Odds favorable, nothing in the way. Guys, that's 4 for 4. Are we going to go 5 for 5, guys? This is 8:12. This is less than an hour's time. Right back to support, just a little bit above. Some of you might miss this one. That's okay. But you see how the patterns repeat themselves over and over, guys. Everything that we do revolves on patterns. Everything that we do. Odds favorable, no termination. Top of the triggers to the bottom of the triggers. Highest point of support to lowest point of support. Look at the bounce it creates. There's a lower divergence, and the trigger lines are inside of the triggers, and it pushes a little bit lower. But you're just going to do this each and every day, guys. Your NinjaTrader locked you out? No trades today? Uh-oh. Did you get on with NinjaTrader to see if they could let you back in? Guys, what do we see right now? We see smalls below the large. The large are widening. They're angled in the direction of the trend. Yeah, it might take them a minute. My large triggers are above these areas. My small triggers are below, guys. We consider 38.4610 an area with the potential to break, but it hasn't broken yet. Until those large triggers clear that area, this is a potential to break area. With this much momentum, everything says down. Everything says down. Guys, once again, I can establish a window of opportunity in the event that I get a pullback, and I have tons of room before I see another Fibonacci area. 2 divergences, 2 slowdowns, but the smalls are still outside. 46 area is inside of favorable large triggers. It's just been hit, hasn't it? Pretty cool. So guys, your ability to read your indicators is going to help you find these entries. It's all based on advantages. And then the second half is posting in class, guys. Taking your trades, showing them in the room, asking for feedback. Here's the first one from this morning. Joel, did you get my reply on this one? Guys, part of the magic of what we do in Nexgen is you can take trades all day long. Post them in the room, let's get feedback. So here's one, and let's go through the process. Small triggers below the large triggers. You can feel pretty good about this trade as far as momentum, right? Rule number 1 has been met. Joel, I'm going to pull up, because I actually annotated and gave you a chart for this one since it was pre-market. So if I put the spreadsheet on here, or the checklist, we're not coming from a good area, right? And that's one of the conditions of the checklist. Is the market coming from a good top or bottom, from a termination condition? It's not. And guys, this isn't a deal breaker, right? And Joel, you annotated that. You said it's not. Did we have odds favorable momentum? Absolutely. No termination conditions. Guys, we have what we call a 50-50. And this takes it outside of high probability. A 50-50 means that your small trigger lines have broken through an area with odds favorable momentum, but your large triggers have not, which means that you don't have the advantage of a clear path. What you do have is an area with the potential to break. So for me, and for new users, I find this being very helpful. when you have a 50-50, when you have an area with the potential to break, make sure that your 5-1 chart is perfect. Make sure that you have every advantage in place. No divergences, no losses of momentum. Strong trigger lines, smalls outside the large, and a very small window of opportunity. What we ran into on yours, Joel, and I just want you to see this, is I love the momentum, and that momentum sets a tone, doesn't it? But what we run into is we have two areas with the potential to break but haven't broken. Is everybody comfortable with this so far? Because you're going to see this a lot, guys. Two areas with the potential to break but haven't broken. We do get a loss of momentum on the 5-1, and this isn't always a deal breaker. For new users, it's okay to let it be. But Joel, the one thing that really got me here is, do you see how your large triggers and your synthetic triggers are split one away from each other? That means that this market might continue. It has the potential to continue anywhere from the mid band down here at 38.64 all the way up to this resistance. There's about a 4-point range inside of favorable large triggers. Your stop is still inside of that window of opportunity. Does that make sense? This resistance is an area where it could have come from as well. So guys, when you have those split trigger looks, your window gets huge. And when your window gets huge, your risk goes up. So you have to ask yourself, Joel, if I have a 50-50 on two areas, and I have a loss of momentum, and my window is huge, and I'm not coming from an area, is this my best chance of success? And I feel like the answer is no on that one. But this is something that it's repetition. So if you go in and you take this first trade, Joel, you did a great job coming in, annotating, taking the trade. So now go back and re-annotate your chart. Or even better, I've already done it for you in this case. But everyone else, when you get feedback on your chart, if you come up with something there that you didn't recognize in the moment, re-annotate, write it down. And what happens is your ability to recognize these subtleties increases exponentially. It happens so much faster with just a little bit of practice there. Great picture to get things going, Joel. Thank you. Ron C. posted in the room. Ron C. loves momentum and clear paths. And he takes a trade style that doesn't really go with that rule number 3, that wait for a pullback. He uses the same chart reading, the advantage of momentum, nothing in the way. He looks for an entry, he can identify his next trouble spot, and takes an exit. It's a great trading style. It's a little different than what we teach, but when you understand how to read your indicators, well, then you get an opportunity to make a little money. That's not so bad, $2,500 in the morning. And then I love this coming right behind it. Your ability to read your indicators gives you this amazing setup. Guys, John Novak nailed this one. Look at how his entry is almost the high tick. He uses Fibonacci for exits. Such a beautiful trade. The ability to do this takes you to something like this. And then I took John Novak's chart as well. And just to confirm, I put that spreadsheet or that checklist on there. And he followed rules 100%. And his results show it. Nice trade, John. Been a lot of shenanigans in here, and let's get to the next pictures. Guys, I want to remind you that this is your class. If you have any questions, please post them in the room. Buck Blue, let's see what you did, my friend. Here's your 13-2. Buck, you had odds favorable. You had no termination conditions. You're able to make money going to the upside. Not bad at all. Buck, beautiful long, right? I know. But it makes sense to celebrate, and I did this for a reason. And then Buck, here you have odds favorable, no terminations. Pull back to the area, and you got stopped out, right? It happens. So let's do this. Was the market coming from a good top or bottom? I have to answer no on this one, right? Because we're not coming from a termination condition. Did you have odds favorable? Absolutely. Did you have no termination conditions? Absolutely. Did you have an area for entry inside of favorable large triggers? Absolutely. Buck Blue, how did you feel about this trade? Were you okay with it? You had to let a lot of good trades go by. I think that the key, Buck, is that you took the first one and it worked out perfect, rules met. You took this one, it didn't work out, it was rules met. And you just have to be prepared, guys. Anything that wins 70-80% of the time is going to lose 20 to 30% of the time. Yep. And Buck, I'll tell you what, I like this entry. I love everything about your entry. I love everything about the conditions. I'm going to upload it to screencast. And this may seem weird to you guys, but I'm about to put Buck Blue's loser right into my spreadsheet because it's an amazing look. Because it is a 100% rules-based trend trade. And because I know that this isn't a trade that's going to work 100% of the time, right? But does everybody see if I click on this link? It's processing the data. But if I click on that link from Buck's picture, straight from my spreadsheet, straight from my best of the best looks, guys, every rule has been met, hasn't it? Every advantage is there. It's just one that didn't work, and that's okay. And it looks like it might have given you a little apology trade right after. Odds favorable. There's a big pullback right to the large triggers and support. So, great trade, Buck. I would take it every time. This is one of the reasons why posting in class is so important. Sometimes you might think that you made a mistake. You might think that you did something wrong. NG time, I'm not sure what you're doing here. Looks like you're trying to take advantage of that momentum. Am I reading that right, NG? You're trying to take those momentum style trades? Odds favorable. Cool. So let me show you just, and I'm not going to tell you how to trade, but one of the things, and I'm going to use Ron as an example here, is that he lets the 13.2 problem areas clear. He lets the 13.2 problem areas clear. Just getting to the other side of these little 1-to-1s, getting to the other side of this 11.4 area gives you a little more of a clear path. So if you're going to do a momentum style, it's real important that you have that clear path. Nice trade, NG. Miss Christina, let's see what you're doing. Everything says up, you let it clear, you hop in. And you're manually managing, no worries. So momentum in, Christina. Momentum out, right? Divergence is definitely a loss of momentum, wouldn't you say? So maybe a little bit for management. And you're managing manually. Let's see if we can fix that. Are you on 7 or 8, Christina? You're on 7. You're on 8, right? NinjaTrader 8. Did I look at that right? You're on 8 now? What are you talking about, John? You're going to make it easier on me? I like it. From the software user guide, we have auto trade management. Oh, thank you. Oh, you're showing the second half of it. Yeah, I already talked about it, John. Thank you. Christina, have you tried setting one up? Okay. No worries. And towards the end of class, if you're here, I can open up my 8 and we can run through it on 8 once. But there's setting it up, little videos. Yeah, absolutely. We'll be excited to see it. And then Buck Blue, John Novak posting a little picture with yours. Talking about not a good top. That one had divergence, so it makes a little better bottom. The odds of going up. This long worked out great. And then after the bad top, when it turns around, looking for that opportunity. That's exactly what John was saying. And this one's very similar, isn't it? Bad top, comes down. Trend trade doesn't work. Right? And then everything turns. And it gives you a pullback to support inside of favorable large triggers to finish the move up to the fib. Pretty cool, isn't it? It happens over and over. Finishing the business to get to the fibs. Absolutely. Christina, once again, clear path, odds favorable. You get in, you get out. I love it. Ron, take care. Don't be greedy. Keep that money. We'll see you in the morning. Enjoy your afternoon. You've got a lot of it to play with. NG time. Looking for one more short. I love it. NG time says with odds favorable, nothing in the way. He'll take that entry right at the area inside of favorable large triggers. Quick profit. Gets to break even. Nice job, NG. Can we use a baseball analogy, guys? If you hit 4 singles, come up to bat, and you hit 4 singles, that's a run, isn't it? Guys, you don't have to make $1,000 every trade to be successful. It's okay to get in, get your money, get out, wait for the next trade. Guys, they set up all the time. Here's crude oil, smalls above, large below, 50-50, right? But we just hit a fib. So we're waiting for the small triggers. Joel, you say you can't get nothing right. Is it because, are you ready? Is it because you're trying to get everything right? That's what I found with me. When I was having a challenge, it wasn't that I couldn't get anything right. It's that I was trying to make everything I did be right, whether it followed the rules or not, guys. I tried to fudge around not having momentum. I tried to fudge around not having a clear path. I tried to jump in a little early hoping that it went. I tried to jump in late hoping it wouldn't turn around. Guys, that's when I struggle. And that's one of the reasons why I do this, guys. Write an example plan for yourself that only focuses on the best entries. And if you're on Simulator, this is going to make your life easier, guys. You're going to create trust on Simulator so that when you go live, it can, doesn't it? Joel, there's not a person in this room that hasn't thought of quitting at least once, probably. But Joel, if you went back through your last 30 trades, and I'm sure you know the answer. I definitely know the answer because I can't forget anything. Joel, if you go back through your last 30 trades, I would say what, maybe 6 of them follow this plan to the T, right? About 6 of them out of 30. The rest of them are 50-50s with divergence. The rest of them are indetermination conditions. What do you suppose your win percentage is on these that follow the checklist, Joel? If you're being honest with yourself. I would say you're probably in that 80 to 90 range on the checklist. Would you agree? Awesome. So guys, here's the challenge of becoming a day trader. If you can go back and historically say that this look wins 80% of the time, 70% of the time, if you can go back and you can identify through your own trades that you've experienced that level of success with this perfect trade, doesn't it make sense to focus on the perfect trade, to get so comfortable with the one thing that allows you to make money before you try to turn it into 3, 4, 5, 6, 7 different trades? So, all right, maybe Ninja Trader's putting you in a little bit of a timeout so that you can take a deep breath and write a plan. And convince yourself. Do a little soul searching. Guys, I will never tell you how to trade. I won't tell you what rules should be your rules. I won't tell you what style should be your style. But what I can tell you is that when we talk about this example plan, what it does is it puts you in a position to understand a skill that you can make money with while your education continues. It's a skill that can be learned inside of a week or two. It's a recipe that's repeatable, that's back testable, and it gives you an opportunity to be on the correct side of everything while you grow your plan. Guys, you will not be a high probability trend trader for the rest of your life. You're going to find other things that work for you. And while it's a little harsh in the delivery, it's very true, guys. If you lose a trade and you annotate that chart, ugh, damn it, shoot, heck, it's all negative. If you say you missed a trade, your brain is likely to try and make up that trade. Be positive. If a trade doesn't work and you followed your rules, guys, be okay with it. It's hard. It's when you stop expecting to win every trade that you start winning more trades and you understand that losses are a part, and you stop focusing on the wins and the losses and you focus more on the execution because you know that the execution brings results. How do you share your plan? Email it to me, Joel. Email me your plan and I'll give you all of my feedback, I promise. And I'll make notes on it and we can do it. You can drop it in here if you're comfortable. Not everybody's comfortable putting their plan out there, but you can drag it and drop it. Guys, that invitation goes for everybody. If you write out a plan and you want a set of eyes on it, email it to me. And you know what, Christina? I think it's amazing that you guys have 2 separate plans. There's John Novak's plan. Oh, my wife and I too, Christina. She is brilliant and science-based, and I chase butterflies. Here's another one. This is one that I wrote out for myself this weekend. This is what I'm looking for. Guys, I have a plan. I have my management defined. I have my entries defined. It's so true, Christina. We are so opposite. Like on paper, it doesn't make sense at all. But we're all like that in this room too, right? Guys, I realized that while I have an enormous amount of respect for John Novak's abilities, I can't trade like John Novak. Our brains are too different. I can't trade like you, Christina. I can't trade like Joel. I can't trade like anybody but me. I have to have a plan that suits me, right? I have to have something on paper that works with the way I think. And every time I take a trade, if I write my rules on that chart, well, then I can police myself. I can make sure that I'm true to my plan. And my plan is designed to keep me out of trouble. There you go, Christina. That's awesome. The process yields results, guys. Whether it's day trading, whether it's golf, it doesn't matter. What's going on in the market right now? What do we see? Smalls below the large. Guys, we have an area with absolutely no trigger lines through it in the moment. In the moment. So we're just being patient, right? Look at these split triggers. 1, 2, 3, 4 divergences on the S&P. Things are a little wonky, aren't they? What do you think, guys? Resistance to support to resistance to support. Can we use our ability to read indicators to help keep us out of a little bit of chop, let an area clear? I hope so. Guys, I'm going to take just a minute. I'm going to let you watch the S&P do what the S&P does. If your rules are met, take a trade. If they're not, sit on your hands. It doesn't cost you anything at all to sit on your hands and do nothing. I'll be back in a few minutes. We'll watch the live market. We'll talk about the information that it's given us. We'll look at what you're doing. And then we will resume. Guys, remember, this room is designed to give you confidence and make you comfortable. If there's something that you're not confident in, put it in the room. Let's talk about it. Back in a minute, guys. All right. All right, guys. Coming back. Good morning, Zeba. So you closed your chart. Did you X out of the chart or did you close your workspace? Let's see if we can get you fixed. Good morning, Tank. Okay. And when you try to open it back up, it doesn't show you anything at all. NinjaTrader 8, right? If you hover over, you close the workspace because your chart wasn't moving. Yes, 8. And now you're opening it back up. Hover over, open up NinjaTrader 8, make sure you're connected. And if you hover over your NinjaTrader like I am here in the room, do you see the charts? And then John putting a little more tech wisdom in there. No worries. Let's see where we're at. Joel, you asked, since you do things as similar, could you send a copy of my plan? You know what, Joel? Send me your plan. I'll put my notes on it. And I'm doing this for a reason. Joel, one of the things is my plan can't be your plan. Even if it's similar, my plan can't be your plan. Because my brain sees things differently, it understands differently. There's things that I'm comfortable with that I look for that you may not. My plan uses charts that you don't use, that you don't need. So send me your plan. Yeah, so send me your plan. Joel, if you want a simple plan, there you go. That's the one, Joel. That's the one. Man, there's so much movement today. How do we feel about a crude oil long, guys? Is your workspace open? Zeba, remember, you have to open each workspace. Zeba, without seeing your computer, it's tough for me to diagnose from here. NinjaTrader 8, what I would do, honestly, if it felt like everything was sticking, I would start fresh. So you can either get rid of everything, it's open. You can either get rid of everything, rerun your installers, make sure that the workspaces are there, that they're brand new, that they're good, or you can build charts. But without seeing what you're doing, it's tough for me a little bit there. All right. New users. Did anyone go long in crude? 74.58, pull back to support, ride it inside of favorable large triggers. There's another circle. There's another opportunity, right? Yeah, Jason will probably get you easier than I will. It's just kind of guessing. If I can't see what's going on. Is that from Mark Douglas? Plan every trade, trade every plan. I love it. Nice. Guys, execution is key, isn't it? Wow, they're just... S&P is going. And Zeba, John keeps posting little hints for you. See if it helps a little bit. But Jason will get you squared away. Three divergences in the same price range may terminate a trend. Not guaranteed to, but it may. 38.78 is a fib that hasn't yet broken. The trigger lines aren't through it. Multiple divergences say don't go short. If you did go short, you have an opportunity to manage out. Guys, all we're doing is chart reading. Fibs hold, small strong, larger below, 50-50 trades. Market's moving today, isn't it? It's a lot of fun. Are you guys trading? Not a lot of pictures being posted in class. Too much going on to post in class, right? I believe this was John Novak. Oh, John, don't post that in class. Guys, this is your next level. This is the difference between being a high probability trend trader and being someone that can read charts. Area not broken. Trigger lines have not broken through a 38.78. Multiple divergences as a termination on the low. John Novak went long, made some money. Guys, Ninja Trader's down for you as well. Sorry, D. All right, NG time. Let me wrap my eyes around what I'm seeing here. Odds favorable into a termination condition. Hey, Bobby T, make sure that F is clicked in the upper right-hand corner. There shouldn't be a capital F up there. You'll never lose your charts. It's when you scale them mid-trade so much, you've got to realign them. NG, absolutely, you traded directly into a termination condition. That much momentum gave you a second test of the entry of the area. But certainly trading into the termination condition there. And then John, termination creates a full reversal. Full reversal gives you odds favorable momentum. Odds favorable momentum pulls right back. Doesn't quite make an area inside of favorable large triggers. Not 100% high probability trend trade, but certainly an amazing read. Saying with these one-to-ones right here, with no divergence, with everything up from a great termination, odds favorable, nothing in the way. That's just having the ability to recognize. And then 7 p.m. last night, the patterns repeat themselves again. And it is. It's the same thing over and over. And that's exactly what John's telling us. Guys, look at this. Area doesn't break. Straight up to an area that doesn't break. Straight down to a pivot stop out. Straight up to resistance. There's a fight. There's a fight going on right now, guys. You can identify that fight. You can identify support holding. Smiley face doesn't make it better, John. There's three divergences from the low, right? Support won't break, but this resistance won't break. Doesn't it make sense to wait for a clear path, to give yourself the advantage, to put yourself in a position where you've got that simple recipe? Odds favorable, no terminations, right? And then looking for a pullback to an area of support inside of favorable large triggers. Do you see how quickly that happens, guys? Strong triggers, haven't reached the key area. Area of support inside of favorable large triggers. This is a trade that typically wins between 70 and 80% of the time. After the reversal bar, I can reduce risk. Guys, that's a tiny little winner or tiny little loser for an odds favorable trade. Breaking out. That's how quickly it happens. That was less than 8 ticks, guys. That was a good opportunity. I'll take that one every time. And if it doesn't work, we have to see what's going on. But look at what the market's doing right now. Huge drop down, and you can see the consolidation, right? And guys, there's the same trade, isn't it? Rules met. It's about execution. It's understanding the advantages. Guys, that's a trade that I'm obligated to take 1,000 out of 1,000 times. Now we're to pivot stop out on a low in a range-bound market. Divergence. Crude oil, large is up, smalls are down. John, was that your pre-trade there? Isn't that everything that we just did? Beautiful, isn't it? How many advantages can you get going into one trade, guys? Larger up, smaller down. Ziba. See that arrow right there? Click on it. That's okay. Don't be sorry. Your chart trader, because your charts are squished a little bit, your chart trader's probably hidden. So click this arrow right here. And see if that uncovers your chart trader. So much easier with a picture. Thank you. The drop-down box, did it give you chart trader? Well, it may not open it, but it may get you an access to it. Let me see if I can find a NinjaTrader 8 picture in here. When you click the drop-down, Ziba, that's the symbol that you're looking for right there. That rectangle with the 2 boxes off to the side. Buck, as many fit the rules. That's the best answer, and then it doesn't create expectations. As many trades fit the rules is how many you'll get. Today, 30. Yeah, today there's a lot. Awesome, Ziba. Some days it's 1. But wouldn't you hate to go into the day saying, well, I'm going to get 10 trades, but only 1 fits the rules, and you take 9 that don't? Coming from a good top or bottom, Joel, I think yes. That's a resistance holds, turns, no terminations, entry in large triggers areas. That's it. That's the one, isn't it, Joel? That's your best of the best look. All day long. Beautiful. So now you just commit to it. Yeah, Buck, I know that's not the best answer probably, but that's really what it is. Guys, they're trying so hard to break out. This was a 50-50 on a divergence low. There is such a big fight going on in the market right now, guys. It's okay. It's okay to let them fight it out and then continue to look. Whoops. I'm not sure what I just did there. Guys, if you ever make your chart super wonky, I just put my midband below everything. Reload your template. I just did that. Oops. So Joel, the best thing you can do, you know what your best look is, right? You've got it. You've got it in your spreadsheet. You see it every day in class. Scroll back, Joel. Find 100 of those. And that, John just brings the next one. Guys, today's busy. You need to be comfortable with your rules, right? All right, Zeba. Was rule number 1 met? Smalls above the large, larger wide, angled in the direction of the trend? Since you didn't annotate your chart, we're going to annotate it verbally. Did you have odds favorable momentum, Zeba? I like it. That's a good look, isn't it? Yeah. So Zeba, did you have a clear path? Had your trigger lines broken through that area of resistance? No. So what do you suppose went wrong? Rule number 2, right? And guys, this is very much why we go through the process of writing on your chart. Zeba, I love that you posted this. Did you know why you lost, Zeba, when you looked at it? From a good top or bottom? No. It's coming from the middle of nowhere. Did have odds favorable. Didn't have a clear path. And Zeba, look at your trigger lines. Look how split and divided they are. Oh my gosh. Do you see that? They're not trending one on top of the other. There's nothing favorable about those large triggers. Those large triggers are creating a huge gap that presents problems. When they're one on top of the other, that's when it creates an opportunity. Great picture, Zeba. Rule 2 would have kept you safe. Does that make sense? Guys, look at them. They're still fighting. Awesome. That's okay, Zeba. But I'm glad that you did, because isn't it great to get that feedback? I want to see all your trades. Guys, don't cherry pick the trades you want to give me. Show me everything you do, win, lose, or draw. There's conversations to be had about everything. Guys, what do we notice on crude oil? Same thing as the ES, right? Can we identify the areas that seem to be stopping the market in their tracks every time they get there? Doesn't it make sense to let them break? Doesn't it make sense to get out of that glass box of emotion? 90%, guys, 90% is just reading your indicators. 90% is waiting for advantages. Small triggers down, large triggers up. That's not odds favorable momentum. When the market moves this fast, does anyone else have that little adrenaline? That, oh, look at it go, I want to be a part of it feeling? You got to squash that. Stick to your rules. Zeba, let's see what you got. Zeba, right click in the gray area, and it'll say properties. And when you get to properties, put show P&L. I don't have NinjaTrader up 8 to do it, but if you right click in the gray area, there's a properties tab. John had a trade per his rules. All right, John. Stick to your checklist, right? NG, you got lucky again on a termination condition? You sure did. Everything set up and you went short? Awesome, Ziba. Well, guys, the ES broke out of its range, didn't it? 1, 2, 3, 4 divergences in the same price range. And it went up. Crude oil broke out of its range. Just got to be patient, right? Let's talk about it in the moment. Do I have the advantage of momentum? I've lost it on my 13.2. I've lost it twice on my 5.1. No areas of support. Guys, it's just a holding pattern there. So Ziba, if you close out your chart by clicking on the X and not closing the workspace, the easiest way to get it back is close the workspace, and when it asks you to save it, say no. And what that'll do is it will revert back to what it looked like when you first opened it. Did it work? I like that you're playing with all these things. I think that's great. No? So the workspace is up, but your chart is gone? All right, Ziba. So here's your practice. So you're going to build a chart then. You're going to replace the chart. You're going to have to build a new one. Here's your instructions. You've got this, though. You're getting good at this. You're going to have to hit new chart on NinjaTrader 8 and actually build a new chart. Well, crude is a runaway. Guys, S&P is at a divergence high. My trigger lines haven't broken through yet. I've got multiple divergences. Looks like a recipe for pushing a little lower, doesn't it? It may not, but I don't have odds favorable momentum. You're welcome. Did it work? Play with it, Ziba. See if you can get it done. I love it. I love that you're doing this. Gary, on which platform? NinjaTrader 8? It should roll automatically. Have you opened a chart? It should give you, there you go, just 623. Mine gave me the pop-up this morning. Smalls are through the area. Large haven't made it yet, 50-50. There's no divergence potential. There's a window of opportunity right there. This area hasn't broken yet, though. Trigger lines haven't gone through. Man, they're keeping us busy today, aren't they? I love it. You notice how the small triggers did not break through one-to-ones, guys. Termination condition. Does it feel like the market's moving really fast to anybody else? Crazy fast. Too fast. That's okay. So take a lot of pictures. Guys, when you're not comfortable with the speed of the market, you can still take pictures. You can still talk about what's going on in the moment, right? You can still talk about whether or not you have odds favorable momentum, whether or not you have no termination conditions. Claire, strong bottom, breakout, odds favorable, 74.93. So you're getting in before the area, getting out at the area. I like it. And maybe even Claire, yep, oh, there it is right there. You clear the area, 35, a little late in the move, not as much momentum. Remember, Claire, I think that, remember that it's the 13.2 areas, right? We had odds favorable. We broke through the divergence high, 80-ish, 85-ish, all the way up to 11 or 12. And then when we break 12, 13, we have odds favorable. That's your next opportunity. Looks like you're doing great. Christina, nice job. John, nice job. Does that make sense, Christina? You're still using that 13.2 for the clear path. Awesome. Then right to support, no trigger lines break through, creates a big bounce all the way up to resistance, no trigger lines break through. Guys, you got to be on your game. All the trigger lines break above, pulls back. There's our gap theory, guys. Look at that, small triggers. Then we get that momentum. Just waiting for everything to line up. Two divergences on the 5-1. Small's breaking above the large on the 13-2. No areas inside of a favorable large triggers. Guys, your rules maybe have you a little bored today, but there's another termination condition. Claire, let's see what you did. Odds favorable, you take the momentum style entry, clear the 1-to-1s, pull back to the 1-to-1s. Absolutely beautiful execution. John Novak, looks like an 8 range chart. John saying, you know what? No reason to fight. Assuming that was the S&P. That's good. Everything says up. No shorts when everything says up, guys. That's rarely a bad idea. Divergence prints, pushes all the way back to support. All my triggers are above the area. Let's see what happens, guys. Let's see who wins here. I'm about to just go to a bunch of pictures. You guys want to talk about the experience curve? Oh, Joel, there's a picture. Let's see what we got. Joel, price accelerates away, large triggers don't follow. Yep, there's your gap. John, termination condition. You go short after 3 divergences at resistance with no trigger lines through. Everything says down, you're able to take advantage. Yep. Nice, John. John, remind me, how long have you been with the software? It didn't line up, and then it did. That's it. Patience. Guys, John Novak's trades, please don't try to be John Novak. Not yet. There's so much chart reading that goes into what he does. If you're focused on a high probability trend trade, it's not going to be your trade. It's your chart reading that's going to take you to that next level, guys. Strive to be better. But Joel, if you don't know how to lay a foundation, how are you ever going to build a house, right? Guys, first glance, what direction is the trend on the 13.2? What do you think? Says up, doesn't it? Small trigger lines are above the large trigger lines. It says up, doesn't it? You guys understand this. The first trigger reading says up. The termination says this area is likely to hold based on where the triggers are. The 5-1 chart begins to confirm it. And then remember, we see change on a small chart before we see it on a large chart. John's using a small chart read. He's letting things turn on the small chart. Triggers roll, smalls below, to take advantage of a termination condition on the 13.2. Guys, if you're trading only the 13.2 and the 5-1, this is a difficult trade for you. And that's the point that I'm trying to make here, is you're not going to be a high probability trend trader forever, but what you are going to be able to do is recognize advantages. I love this picture. Everything says down, go short, make money. Everything says up, let it roll. Let the market tell you that this is a good top. Let the market tell you that this is a good area, and then take the opportunity. I can't see where you got in, Zeba. Zeba, you built a 3-minute chart. So right click and go to your data series, make it a Nexgen Renko chart. See how that says 3-minute? Zeba, you see it? 3-minute. You're going to want to right click, get to your data series, and make sure it's Nexgen Dynamic Renko 13.2 or 5-1, whichever chart you needed. That'll work. Awesome. Guys, there's a pivot stop out at resistance, right? I think John's lesson, and I've got a great picture to kind of reinforce exactly what John Novak did there, and I want you guys to see this. Let me find it. Sorry, give me just 1 second. All right, guys, here we go. Give me just 1 second. I'm going to mute for just a second. Squirrel got in here. It's crazy. It's all over the place. Be right back. All right, guys, this is my picture. I think it's pretty amazing. As you learn to read your indicators, you also learn to be patient. And what John Novak showed you in that trade that he took, those shorts that didn't make sense from a 13.2 standpoint, were absolutely brilliant from a smaller chart standpoint. And this is that idea of being patient and waiting for the area to hold. And I'm going to show you exactly how this worked on his while showing you this picture that I made. He had resistance with the potential to hold as everything was coming up and everything said yes. This area of resistance had the potential to hold. What you'll notice is he lets his trigger lines roll on a smaller chart. He allows the smaller chart to tell them that the area is going to hold. And what you're going to find a lot is that patience piece is going to keep you from taking the same trade over and over and over again. In this price, right at resistance that's likely to hold, is the exact same price when it has held. As it comes into resistance, there's a fight, right? There is the triggers are up, the momentum is up, but the area is down. We know that it has the potential. And if you keep trying to get into that trade, you find yourself getting run over a lot. And it's being patient, waiting for the roll that keeps you on the right side of the fight. Going from I think resistance will hold to resistance is held. And you'll see that this price is very often that price. And I'm not sure if it happened on John Novak's. Let's see. Little bit lower. But it's the exact same price that this trend trade where everything was down. They do their dance, everything says down again, and then they continue it. I always give John little notes on the side. I'm like, hey, you're going to confuse my class. But it's a great lesson, guys. You're high probability trend traders to learn to read your charts, and then all bets are off. And then all these trades you see other traders taking advantage of begin to make sense. And that's kind of where I was going with that, guys. Everything says up. We're just waiting for 85 to break, right? Small's above the large are widening. They're angled in the direction of the trend. Everything says up. And then for the last post, John says it was divergence plus fibs on the 13.2. Loves to reference that 2004, 2005 plans. Area to hold, let everything roll. Reading triggers. Take advantage, midband becomes the first target. It's not a new concept. It just requires your ability to read charts. And that's exactly what we're working on, right? Odds favorable, nothing in the way. If you took the entry at the midband, 3 divergences gave you an opportunity. All right, so Ziba, all you need now is a template. Right click. Template. Load. 13.2 Rinko. Awesome. Bobby, have a good time. Have a good time. There we go. Still haven't broken through that area, right? John, there's a question for you in the room. He might be listening. I don't know if he's looking. Paul, I can tell you what I know about it. John was hand drawing fibs in the beginning. Actually, here he comes. John's like, I'm busy. I'm making money. Andy Trader, let's see what you did, my friend. Odds favorable. Everything says down. You take the momentum style and get paid nicely on it. Andy, great trade. Great trade. Everything says down. You take that momentum style. I mean, that's a beautiful textbook. Nice job. John, same thing. Everything says down, split triggers. It makes it right back up to the synthetics. Everything says down. Nice trade. All right, Claire. $50.50. You had 3 divergences, so you let the small triggers roll. Get in. Not the cleanest look, right? I've seen you take cleaner trades, Claire, but I like it. 50-50, but you had 3 divergences on that 50-50. But letting those small triggers roll kind of puts the advantage back in your court, right? Every trigger agrees with the trade, the direction. And then you're able to get up there. And there wasn't divergence on this pullback. And your exit almost looks like a potential entry for a high probability trend trade, doesn't it? Am I mistaken there? Boy, I've done that one. No divergence, smalls are breaking. You got through all the hard part and hopped out at your entry. Great trading, though. Guys, triggers never made it through, did they? Triggers never made it through. I love that. Rule 2. Guys, it is 10:56 in the a.m. I'm going to take a minute. When I come back, it's your class. I'm going to let you guys tell me what you want to talk about. I'm going to let you guys show me pictures. I'm going to let you guys run the last hour. I'll have the microphone. You tell me what I'm talking about. So if you have questions, post them in the room. If you have comments, if there's anything that you want to talk about specifically, let me know, and we'll talk about it. Last hour is going to belong to you. I'll be back in a minute, guys. Let's get into that last hour and let's leave it for you guys. Quick read. Every trigger line is above support, right? 3 times the market bounced off of support, 3 times it couldn't break. It's a good indication. The basic rules of termination conditions said that that was likely to hold. And then we smash up strong triggers, right? No terminations. There's a window of opportunity at support just inside of favorable large triggers. Well, it just fell outside, right? Guys, this is it. Even when it's happening fast, the rules do what the rules are going to do. The patterns tend to repeat. We're losing momentum. We're at the bottom. We're at support. All we're doing is chart reading over and over. What do I see? What is it telling me? What does that mean? If this happens, then I'll do this. Resistance is held again. Smalls are down, large are up. Resistance held again. There's one area inside of favorable large triggers, but it's not a rules met trade. Loss of momentum, right? We knew that we were coming up. We cleared the areas. The smalls had returned. The smalls had returned. And we got a deeper push. Let that momentum lead the way, guys. Let that odds favorable momentum get you where you want to be. Made this picture a while back to help you guys out. This is your rule number 1 picture. I'm going to share it in the room. If you go through that Discord page that John Novak built, you're going to see a lot of the same stuff. Maybe we'll go through it for the last hour. Guys, odds favorable momentum requires that separation between small and large. That's your best look. Anything can happen, odds favorable. Anything can happen, odds favorable. You'll notice that those turning points tend to happen with anything can happen triggers. When they don't agree, there's indecision. You let them sort out and get back to odds favorable. I should be on, David B. Guys, give me a Y in the room if you can hear me. It says I'm not muted. Nobody? All right. Okay, cool. Thanks, guys. We'll tell David B to refresh the room there. Cool. Guys, this is rule number 1. Odds favorable, that advantage of momentum, right? When I don't have it, this is like a transition phase. This is where new users try to predict. That's where challenges tend to happen. John Novak posted in the room, I love this. Missed the best entry, went long late, horrible management, had an opinion versus following the rules and lost more money than he should. Guys, opinions are going to happen. Wait for everything to agree, and it's easy money. This is a great lesson, John Novak. Thank you for sharing that. Everything agrees, life tends to get easier. Claire, everything agreed. You get in, you make money. I love it. All charts green, all charts strong. John Novak, let's see what you did. All charts agree. Area for entry inside of favorable large triggers. And John said the magic word bingo there. There's the S&P. That's the look, guys. Whoops. That's your look. That's your precursor for every great trade. Odds favorable momentum. Odds favorable momentum. Most of the time, all you can do. Odds favorable momentum. Strong triggers. Weak triggers. Anything can happen. Guys, if you let that be the first thing that you do every time you look for a trade, your chance of success goes way up. Anything can happen triggers. And look at the push. Odds favorable. And it's pushing up, isn't it? Guys, what do you want to talk about? I feel like I'm rambling here. This market is moving like wildfire. Want to just mute the mic and we'll talk when you guys have it? And if you're on point and in tune with your plan, this is a great day. I believe Ron referenced it as an ATM this morning. They've been too fast to even take picks. So Cam, what we're looking at right here is strong triggers. We're not coming from a good bottom. So while the mid band isn't technically a termination condition here, we're going to respect it a little bit. When we're coming through and I'm not coming from a good bottom, this may just be a point for continuation. So we're aware if you took the entry at support inside of favorable large triggers, it stayed in your window and you're well up in the trade. The mid band is not a termination condition here. Why not? Well, because when we talk about mid bands as termination conditions, you guys remember this one? It's when those large triggers remain a full bar away. It's when the large triggers remain a full bar away on my 13.2. Here's that gap theory, talking about that price accelerates away from the large triggers. When it hits an area, it may snap back to the large triggers. Cam, does that make sense? Because the 13.2 chart, large triggers weren't quite a full bar away. And look how price, where those areas of support line up right inside, right where that hit back on the large triggers is, creates a great opportunity. John Novak took the opportunity. And then I believe he talked about the management side of it. The smalls are below the large, lower divergence. He says get out. Small chart showing change, right? Because it is, he's okay getting out, taking that small winner. And it pulled right back to those large triggers a second time and then finished the move right up. But the beginning is always odds favorable. Pretty amazing how often things work out, guys. Termination, termination, mid-band, termination, mid-band. Here's that fight. Once again, look at that mid-band, holding over and over. So Cam, that's where you start going, man, I should probably respect that mid-band a little bit, right? But what do we see? We're into that termination, but now everything is angled up. Now my trigger lines are angled up. Every chart's angled up. We can start that process of if-then. If this area breaks, if my trigger lines get above, everything agrees for a potential long trade. If. Or you could play the until. Until my trigger lines get above these key areas, I won't take a long trade because of my rules. John showing some of his management reasoning there. I like it. It's all chart reading. I think that's the one thing, if I had to say one thing about what you're doing, guys, is it's all chart reading. Chart reading gets you into the trade. Chart reading teaches you how to manage the trade. And like John said, the more charts that you add, the more difficult it becomes until you're very, very comfortable with what you're looking at. But odds favorable momentum. Watch this. Let me pull out my odds favorable momentum picture. Can anyone tell me what time frame this is, guys? Is this a 5-1 chart? Is it a 13-2 chart? Is it a 34-5 chart? Is it a 55 chart? Guys, is this a daily chart? You can't, right? There's no telling. But what can you say without hesitation? That there is odds favorable momentum. This is why we focus on a smaller time frame or smaller charts first. This is why we look at a 13-2. This is why we look at a 5-1, because the patterns are going to be the patterns, guys. Odds favorable will always be odds favorable. Termination conditions. It'll be the same recipe of reading your trigger lines when price reaches the area. Pullbacks will always be pullbacks. We look at a 13-2 and a 5-1 because they create a lot of opportunity during the day. Your chart reading will take you where you need to be. That was a 50-50 trade. We had two divergences. Does everyone understand? The 21 hasn't broken yet, but it has the potential to break. With that odds favorable momentum, the smalls are down, the large are down. Three divergences, all of them going higher. Small chart gives you an indication of what's happening on the large chart. Guys, we can just keep going through lessons here all day. The S&P is giving them time after time. Absolutely, Walter. When I talk about a good top or a good bottom, termination condition that creates a full reversal. That's the shortest definition I can give. A termination condition that creates a full reversal. We'll just go to the manual real quick. So when I'm talking about a strong top or a strong bottom, this pivot stop out is a termination condition. It creates a full reversal. Large go from red to green, and then it gives me that odds favorable momentum that starts the process of looking for a trade. Termination condition gives me a full reversal. That's a strong top. Termination condition that creates a full reversal, that's a strong bottom. So when I compare that to these turns that seem to happen in the middle of nowhere, I have to become a little more leery about that 50-50. Those 50-50 trades tend to not work quite as well if we're not coming from a strong top or a bottom. And I have a great 50-50 picture I'm trying to find real quick. Come up with it. Does that make sense though? And what you see a lot is when price overruns the area, that mid-band, I believe Cal was asking earlier, was that mid-band a termination condition? Well, I'm going to watch it. I'm going to respect it, especially when it doesn't come. Sometimes we get a little bit of overrun. Oh, my Discord just went, guys. I know you can hear me, but you can't see me. Let me get back to the education room real quick. Discord has a mind of its own. So where I was going with that is sometimes when we're not coming from a good top or we're not coming from a good bottom, just being aware that the trend may continue. And that's kind of what happened here. We came from that great termination. Everything went up. We overran. It pushed right back to support, continues up, right back to the mid-band. And now we appear to be continuing up. Probably trying to make that next key area. Absolutely. And Sam, it was a 50-50, wasn't it? But what did your 5-1 tell you? Sam, if you took it with one divergence, you were in at about 18 and a quarter. Came all the way down to 1575, printed a higher divergence saying, hey, might be time to get out of this 50-50. And then it gives you a third higher divergence with the small triggers inside. And this is the one that if you tried to hold beyond this one, then you stopped trading what your charts were saying and you began to trade hope. Does that make sense, Sam? One divergence slowed it down. Two divergence, man, we can manage. Third divergence, get the heck out. And then everything turns and it says, you know what? If you lost, Sam, I'm sorry. Let me give you a pullback to the support right here to continue up. Awesome. So the large chart said go and the small chart said, all right, time to get out. And that happens. Christina, have a great day. Thank you for being here. See you in the morning. Joel, let's see what you did. Sit and wait. Joel says, this is a termination condition. I'm going to be patient. Joel, I love it. Good job. It's okay to take a picture that says I'm not trading, and here's why. Zeba, you took the entry, quick target, divergences start going higher. Time to exit, right? Third divergence, just like we just talked about. Three divergences in the same location may terminate a trend. It did. Nice job, Zeba. You forgot to hit close. That's all right. You're still practicing. Yep. When that third divergence prints, just get out. Nice job. Great trade. Claire, same thing, 50-50. Let me see what we have here. 50-50. You went long on a 50-50 from a weak top. Aggressive. Claire, definitely aggressive. You're fighting a truckload of momentum. Yeah, you have to get Click close Zeba. Clicking X just cancels the order. Yeah, Claire, that's even aggressive for you. Usually I see you in right here, right? Which is probably why you held. 50-50 after that third divergence. I could totally see you in right there. That one was a little quick. But did that weak top play a factor? The fact that it wasn't coming from an area and there was no divergence on it, right? You're like, man, this midband, these areas have a good chance of holding. I like it. I like the way you did it. And your annotation says that too. Your annotation says, hey, look, this is why I did what I did. Perfect. That's all we can do, right? Just annotate a lot. Guys, now you have a pivot stop out. You have small triggers through the area. The large triggers are not. Pushing down with momentum. There's those one-to-ones. Zeba, odds favorable, no termination. Why was your entry not good? That little bit of a gap? But Zeba, can we celebrate? You're right at the area inside of favorable large triggers, right? And now you can use that gap saying, oh, that one takes away a little bit. Zeba, I love this trade and I love this picture. Odds favorable, right? There's nothing in the way. 13-2 says go. 5-1 says, well, it's not the prettiest, but I love where you put your entry. And now we just grow from this point. 50-50, no divergence. If you got in, it pulled all the way up to resistance. They're struggling, aren't they, a little bit? Then there's a higher divergence. Off an area with the potential but hasn't broken. Guys, there's a fight happening here. Do you notice how it circles around one key area too? Guys, Fibonacci lets you know where these fights are going to happen. Your rules tell you when somebody's won, and you can take advantage of it. Higher divergence says don't keep trying. Smalls above the large said the trend has changed. Smalls through the area says this area has the potential to break up with this momentum. No areas inside of favorable large triggers just yet, guys. 1-to-1 said don't go short. Someone told me once, 1-to-1s collect overrun. It was a PSO on a 21-3. But 1-to-1s collect the overrun. 1-to-1s, if you see them just beyond a fib, they love to hold. Strong, odds favorable momentum. There's your momentum style, huh, Claire? That one's you all day long. They're in monkey business, guys. Shenanigans. Grade A baloney. Look at that gap back to the large triggers, and it closes it. They love to close that gap. Crude oil's kind of doing the same thing, aren't they? Smalls were outside of the large. Large or wide, they were angled in the direction of the trend. Everything set up, didn't it? Smalls outside. Guys, if you went long at 1-to-1s right here and it didn't work out, that's okay. Sometimes they don't. I love that look. All day long. I had more advantages than disadvantages. I had every chart in agreement. I had a tiny window of opportunity. That one didn't work. John says the monkey business mode. Pivot stop out says up. Triggers say down. Straddling. 50-50. Let them break out. We don't have to be first. And I think we're going to coin that phrase, monkey business mode. That's going on a coffee cup. I love that if I don't like what's happening on the S&P, I can wait 8 seconds and it changes. There's one for you guys to get paid on. And just in case you didn't catch that one, there's the other. Look at those strong triggers. Only 2 divergences. Tiny window of opportunity. My gosh. John, you took it? Guys, give me a Y in the room. Let's make sure you guys are on board. When the market moves this fast, I don't want you feeling lost. What happened here? Strong triggers, smalls above the large. There was nothing in the way at all, which meant that I was just looking for a pullback to an area of support inside of favorable large triggers. Joel, you took a trade that wins more than it loses. Here's the $1 million question, Joel. Would you take it again? The exact same setup, would you take that trade again? Not just yes, guys. Hell yes. Why? Because, Joel, that beautiful trade that you just took looks exactly like this one. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You develop your trust in the rules, the trust in their strength, their ability to get it done. And if you take 100 trades that look exactly like yours, Joel, you're going to win more than you lose typically. And sometimes the market says, oh no, I forgot Mark. Let me give him another chance to get in. Now I'm losing a little bit of momentum. May push a little lower. Yeah. Watching the bots, right, Joel? And let's see what happens. Whoops, that was the wrong thing. Perfect trend trade doesn't work. It comes down, some silliness. What if we get all of our trigger lines in alignment again? What if everything says up again? We'll just look for more continuation, right? People with deeper pockets than mine wanted that to push down a little bit lower. So I'll just wait for the advantages to come back. Let's watch S&P for a second, see what it does. All right, let's snapshot. We'll annotate a chart together. Guys, sometimes the market moves around and does so much. You guys are either trading or not posting. This last hour really revolves around you guys. So what am I seeing? I went from odds favorable to that first stage of weakening, right? Right here, I'm losing momentum. Not 100% gone. Losing momentum, but it's not 100%. The smalls have reached, but they're not really, they're not strong. They're not that odds favorable momentum. Remember which chart will show you change a little faster? Guys, there's two divergences, two losses of momentum on a 5-1, and my small triggers have made their way back inside of the large. Your only area is below the large triggers, not inside of it. What do you guys think? Is this my best look for a trade? Compare the two. Let's annotate the bottom one. Odds favorable. Perfect entry window. And then even right here. All right, guys, as we look at this, odds favorable and odds favorable, no terminations, everything says up, tiny window of opportunity, and look at how this one launched to the heavens. Losing momentum, no areas inside. Do you see the difference? Are we there? Are we on that that I'm exhausted stage, guys? You see how one is the perfect long and one is hoping that the market continues up? One is all the momentum that I could hope for. The other, I'm losing it. And some people are saying, but Mark, the smalls are coming back. And look at this, though. Cam, look at the trigger lines when the two divergences print here. Look at the trigger lines when two divergences print here. Do you see how your small chart says that we're still probably going up? We still have odds favorable momentum. They line up on both charts. Makes a difference. And then Cam, it's this little bit of study though. These are two long trades. If you stare at this picture, I'm going to give it to you guys. Absolutely, the smalls are still well above the large. Tons of momentum. It's only two divergences, right? When the second divergence prints here, it's the exact same price and the small triggers are working inside. If you look at the two and just kind of go, yeah. But where are they, Cam? They're inside of favorable large triggers, right? Where's your area here? It's already on the wrong side of everything. Do you guys remember those games when we were kids? Find the differences between the pictures? Did you guys ever play that? Let's use the little highlight thing here. Odds favorable. What's the difference? Not odds favorable. Strong triggers. What's the difference? Not strong triggers. Areas inside of favorable large triggers. What's the difference? Not inside of favorable large triggers. Guys, if you're a brand new user, these trades probably looked 100% identical to you in the moment, right? You're like, how come this one won and this one didn't? Take the pictures, compare them. I hate this word obvious, but doesn't it become obvious without the emotion, the anxiety, the stress of trading live as a brand new user to just slow down and look at the ones that win and the ones that don't? Cam, this is how we get next level, my friend. New users, this is how we get next level. Spending so much time looking at these setups and analyzing, asking ourselves, what advantages did this one have that this one didn't? What was this look compared to this look? And what happens is you start recognizing a lot of things. And then John says even clients who have had software 5+ years say it's really all you need. That trigger lines, they picked up a trick. You will too. Paul, let's see what you did. Paul says odds favorable, haven't quite reached the area. Small triggers well outside of the large. Cam, do you see it? Do you see how he let those trigger lines say absolutely, let's giddy up? And he was waiting for that previous pit, and it got it, didn't it, Paul? Nice trade. Great read. What an awesome read. Great look for longs, everything agrees. Horrible look for long, doesn't agree. Great look for shorts, everything agrees. Snag it has a snag. Snag it, snagged it. I'm sorry, Claire. It's okay. I can look at my charts and know exactly what you did anyway. I don't even need you to post anymore, but I like that other people see them. There's a couple of you guys where I'm like, oh, Claire's in that trade. I'm like, oh, Ron's in that trade. Oh, John Novak is short. Right about here. I get to the point to where I start to recognize what you guys do. Ron went short right here. Ron got out right here. If he wasn't already walking on the beach. John says he didn't go short again. I love it. Everything agrees. He goes short. Once it stops agreeing, he says, I don't have to hope. It'll all agree again, right? John and I were talking this morning. I was like, it'll all line up. It always does. Everything will always line up eventually. You just got to be patient enough to do it. Just got to be a little bit of patient and wait for us to line up. Now we play if then. If all my triggers roll and I get odds favorable momentum to the upside, I'll look for longs off this termination condition. If I never get that and my trigger lines all end up below, then I'll wait. Nope. Cam, 13.2. So it's not the mid band. Cam, I'm glad that you posted that. Gives me something to talk about. Let's talk about gap theory. That's what you're talking about, right, Cam? It's not the mid band being a full bar away. It is when price accelerates away. Right here. Price accelerates away and hits an area. Here, the mid band. And the large triggers don't follow. The large triggers remain a full bar away. Cam, that's that gap theory. Here we go. So price accelerates all the way and hits the mid band. The large triggers stay a full bar away. Price is likely to close that gap to the large triggers. Sometimes it might be a fib, but we're looking at the distance between the price and the triggers. We use it at the mid band because when it reaches the mid band, well, that's our area to create the bounce to put us back to the large triggers. Does that make sense? Price reaches resistance, the large triggers don't follow. That's where we expect that gap to close up. Price comes all the way back to support in the mid band, large triggers don't follow. Does that make sense, Cam? It's okay if the mid band's not a full bar away. But here, price reaches, well, that's a termination condition anyway. But if these large triggers were below, then we'd be working that gap theory a little bit. Exactly. Gap back to the large triggers typically gets closed when the triggers are more than a full bar away. And we can use this reversal bar marker as a gauge. If the large triggers are below it and everything's going up, then they're a full bar away. And you can see how on this one they weren't quite a full bar away, and it actually pulls right back, continues up. Small's above the large, larger wide, 50-50, right? Coming from a good bottom, tons of momentum, 50-50. We got one divergence. That's that area where the market's likely to continue. But we haven't broken that area yet. That's just an area with the potential to break. So we don't have a clear path, and we also have a loss of momentum. You have to determine whether or not that's your trade. Loss of momentum, exactly, Joel. And you see how you have the same thing over here, Joel? Small's inside of the large over here as well. You can recognize loss of momentum on two charts. Nice job. Joel, those are the pictures that are going to take you next level. And then John with a little entry technique. Absolutely. So there's your 50-50, your medium probability. If you took it, you're doing great. What if a second divergence with the small inside prints? Changes it even more, doesn't it? More loss of momentum without the advantage of a clear path. Constant chart reading, piecing it together. 50-50, one divergence, Paul, you're in at the best spot, taking an awful lot of money. Everything said go. Nice job, Paul. Second lower divergence, we push right back to the same area. Everybody has a different plan on 50-50 trades, right? But if I'm losing momentum and I don't completely have a clear path, how many advantages? That's it. Guys, John has been saying the same thing for 20 years, for 25 years. Let an area hold, wait for the triggers to roll, look for an opportunity. Same message. Looking to both reversal bar for entry and exit plan. Claire, it should be the exact same as 7. Your plan shouldn't change at all, right? Oh, you use the reversal bars. I got you. Yeah. Hopefully that comes. I'm with you now, Claire. That took me a second. Claire, what you can do is run an NT7 5-1 next to your 8 so that you can see those bars. If you have a license to run both. Do you see how we never had a clear path? New users, give me a Y if you see it. We had an area with the potential to break, but it never broke, did it? Lower divergence, small's inside, lets you know that we're losing momentum. Small stayed below, the large completely turned and rolled, showing change. We're in an odd area right now. They'll all agree again, won't they? The odds of it staying to where everything doesn't agree, I mean, it's probably not going to happen. It's either going to go up or down, right, John? Large triggers are above the area, but the small are below. That's it. Not going short. But wouldn't it be cool If the market pushed up, if these smalls pushed up, if the large stayed up, if all your trigger lines on your 5-1 agreed, and everything said the same direction with the momentum, well, then I feel as though you could just look for an opportunity. You're caught in between small and large right now. Large stay up. Oh, now the small stay up, but they're on the wrong side. But we're starting to get a little agreement. Market flow agrees at 39.20 for you. Pretty awesome. Little bit of patience, right? Little bit of patience. Do you have a high volume area at 39.20, John? At an area likely to stop the market with all the trigger lines above it? Does divergence kill the party? Woo, look at him going crazy. Look at that fight, guys, between buyers and sellers. If you're a rules-based trader, you didn't take a trade. If you're looking for that high probability trend trade, you didn't get an opportunity there. Now we've got a 50-50 at the 1-to-1s. No, it's for 8. Joel, what do you need? Jason, I'm sure, has something. Guys, as NinjaTrader begins to phase out 7, make sure you read all the accompanying stuff, Joel. But as NinjaTrader begins to phase out 7 a little bit, John's doing an amazing job of staying ahead of it, of looking for potential problems, of looking for opportunities, looking for things to make it better, to run smoother for you guys. And he's put an awful lot up in Discord and a lot of stuff out there to help you guys be on the right side of everything as that change happens. Termination, odds favorable, waited for the chart to agree. There's your opportunity. Nice. I don't know, Joel. I don't think not being comfortable with something means that you're slow. It just means that you've got to work your way into being comfortable with it, right? There's a 50-50 trade with no divergence and a tiny little window of opportunity. Medium probability trade, we're at areas with the potential to break but have not broken, which means it's not high probability, but we can identify without hesitation. We'll see. What is the one thing? I love that. If you're slower than you think you should be, what's the one thing you can do to help counteract that slow? Oh, there it is. High probability trend trade, and then grow from it. Joel, I'm not a computer guy. But I'll tell you what, if you do something enough, if you repeat something enough, eventually it sticks, doesn't it? $50-50, no divergence, cute little window of opportunity, and the market's going up. Guys, I can't make this stuff up. Guys, that is the most action that we have seen in a market in a long time. It was a busy day. It was a busy day, wasn't it? A lot going on. A lot of ups, a lot of downs, a lot of momentum, a lot of entries inside of favorable large triggers. A lot of being patient, letting your trigger lines roll. A lot of chart reading today, guys. Awful lot of chart reading. A lot of discord saying, hey, Mark, I don't want them to be able to see you anymore. That's a sign, isn't it? That's a sign that you guys need to go study high probability trend trades, to go back and circle tails and look for opportunities to fire up market replay. Are all the charts supposed to have T3 Fibs? Yeah, Cam, that gets you every 2 hours. Claire, I am so thankful for that time change. I know you guys on the East Coast probably hate it. Guys, for those of us that went to Oregon and can't stay up past 7:30 or 8 because we're used to Central Time frame, and then it's dark and dreary at 5 o'clock, my gosh, I love that I get more hours in the day for potential sun. Makes me happy. Makes me happy. Guys, I think that's it for me. I'm going to call it a day. I'm going to open up my charts. I'm going to look for high probability trend trades like that one that just happened on the S&P. We're going to come back tomorrow and we're going to do this again, and we're going to talk about simplicity, and we're going to focus on the best of the best, and we're going to put ourselves